Yo, what's happening, people? This your boy Leo. Welcome to my channel, Stack and Grow Investments. Make sure you hit that like button, that bell notification, and that subscribe button. You know that helps the channel grow. But check this out. A lot of people always ask me, how much do I need to start trading stock options? In this video, I'm going to answer y'all question. And also, the SEC made a major ruling that's going to shake up the whole stock market game. We're going to talk about that too. See you after the intro. According to Charles Schwab, this is something that's been in the making for a minute, but the SEC finally approved scrapping the $25,000 day trading minimum. Under the new rule, traders will no longer be required to maintain an account balance of $25,000 to engage in frequent margin day trading. Do you know what that means? The stock market have a pattern day trader rule, also known as the PDT rule. That means if you want a margin account, you need to have a minimum of $25,000 deposited in your account. If you don't, you can't take no more than 3 or 4 trades a week. And that used to frustrate traders. That's one of the reasons why I joined Forex when I first started trading. I didn't want to deal with this rule. But the way traders avoid this rule, they'll sign up with an offshore broker or they'll come in with a cash account. Because with a cash account, you can trade as much as you like, as long as you got that cash in your account. But the problem then becomes the settlement rule. Now, the settlement rule could be a little frustrating because even if you make a profit, you win all your trades today, you still have to wait till that cash settle, and that's normally the next trading day. For example, let's say you come into the trading game, you come in with about $500. Let's say you take a couple of trades, you turned that $500 to $1,000 in one day. You made 100% gain, no losses. You still can't take no more trades because you gotta wait till that money settled the next day. Now, it used to frustrate traders, especially if you're in the zone. So with the cash account, you have the settlement rule. Now with the margin account, you don't have the settlement rule, but you still need to have $25,000 minimum in your account, or you only can take 3 to 4 trades a week. That's crazy. Now, a margin account, you also have different strategies you can use because you can buy and sell stock options. A cash account, you can't sell stock options. And if you're selling stock options, you need to own 100 shares anyway, and that can be very expensive. But with a margin account, you could borrow those shares from the broker. This is why a lot of people go with the margin account. But if you don't have $25,000, it could be frustrating. That's why a lot of new traders just stick with the cash account or they go get an account offshore. But this rule will change the game. Look at Charles Schwab. This announcement is on Charles Schwab website. Why? Because these brokers want traders to come back home. Come back to the United States. We good now. These brokers, they want y'all services. You dig? So it's about to be lit. Yeah, man, it's about to be crazy. So you no longer need $25,000 to trade a margin account. That went down to $2,000. See right here? Traders and brokers have criticized the $25,000 balance requirement for years, saying it's too high and limit average trader access to the market. That is so true. A lot of people were frustrated with this rule. Traders and the brokers. The broker was losing clients and the traders didn't have that much money to trade with. Now, this is supposed to roll out in the next 45 days. Some brokers might take a little longer. I don't know why, because this benefits the brokers too. But yes, the day trading rule basically been scrapped. You no longer need $25,000 to obtain a margin account. Now, a lot of people are always asking me, how much do I need to trade with? And I normally tell people about $2,000, $2,500. And I say that because you want to give yourself room for error. If you come in with like $150, $200, and you take a trade and you lose, you can't trade no more. But if you come in with like $2,000, even $1,000, you still have enough money to recover that loss. So give yourself some room to breathe, you dig? But at the end of the day, it all depends on what type of stocks you want to trade. For example, you have a company like Coca-Cola. It's a large cap stock, but it's cheaper compared to other large cap stocks. So if I go to this contract, look under the ask price. This is the call side, this is the put side. I'm looking at the option chain. If I wanted to buy this contract right here that's trading at $76, this contract is quoting one share, 64 cents. But each contract contains 100 shares. That means I have to multiply that 64 cents by 100. That give me $64. So I need about $64, say about $67, $68 to trade Coca-Cola. You gotta add the fees. So if I wanted to trade Coca-Cola, I probably need about $67, $66 in my account, you dig? And I could trade stock options. I could trade Coca-Cola. If I only have $66 or $68 and I want to take my chance and hopefully grow that account, that's what you're going to need, about $64. You buy the ask price and you sell the bid. Always remember that. You buy the ask price and you sell the bid. Now, if I look at a company like PayPal, I wanted to buy this stock at $51. It's quoting one share, $1.30. Multiply that by 100, I need $130 to trade this stock. Maybe about $133 to trade this stock. If I go to Apple, it's the weekend, so the market is closed. I'm just using this as an example. If I wanted to buy Apple at $272.50, that's 86 cents. 86 cents times 100 is what? $86. Now, what if I wanted to buy a contract that's farther out? Let's say I wanted to hold this contract for a couple of months. I want to give it time to move in my favor. Let's say we go look at this contract expiring in June. Let's say at $275, it'll cost me $10.25 for one share. Multiply that by 100, that's $1,025. Now, do y'all remember that video I posted last weekend? Learn my strategy for free, how to make $500 a day. I taught y'all my strategy in this video. And if you watched this video and you understood what I was saying, you will see this week, after I uploaded that video, this week, every day of the week, the market did exactly what I said in this video. And you could have made a lot of money. Now, let's look at Monday. The market did exactly what I said in that video. I broke it down for y'all. I told y'all the setups. I told y'all the levels I like to trade from. And I told y'all how to trade these levels. I trade the pre-market high to the upside, or I'll trade the pre-market low to the downside. Or I'll trade the previous day high to the upside, or the previous day low to the downside. So the market broke the pre-market high. You see it broke. It came back and retested, and what it do? It shot up. Look, it hit people's stops. Once it hit those stops, it hurried up and got up out there. It ain't play around Monday morning. It started the week off like that. The market shot up, you dig? Right before it closed, it shot up some more. There was a trending day. That's Monday. Let's look at Tuesday. We got another pre-market high. What the market do? It break it ain't really give you a retest, but it did give you a flag pattern. I love these flag patterns at these levels, bro. It's powerful. And what it do? It took off. I also use my 9 EMA, my 50 moving average, my VY. See, I take everything in context. I understand the overall market trend, any major news announcements. You know, I take all that into consideration. I don't just trade this strategy blindly, but it's definitely powerful. This is Tuesday. Let's go look at Wednesday. Wednesday we have what? We had a pre-market high. Let's fix that right there. We had the previous day high, my bad. You see, right here? What the market do? It break the previous day high, came back and retest, bounce off the 50 EMA, and do what? Shot up. Over and over, people. Then we had the pre-market high. Wednesday, ain't really do too much. You could have took it to the low. I don't really see a setup Wednesday. Ain't worried about that. Wednesday ain't no good. But we got the pre-market high Thursday. Look, it broke, it retested, and shot up. Well, that was Friday, my bad. So, yeah, bro, every day this week, you could have had a good trading week just trading the break and retest. And this is the SPY. This is the overall market. A lot of people gauge SPY for the overall market. S&P 500. It tracks the top 500 companies in America. If the market is doing good, SPY doing good. If the market is doing bad, SPY will be doing bad. Yeah, man. Like I said before, I'm back, and your boy back with a lot of sauce. On this channel, you're gonna learn a lot, because it's gonna be educational. Back in the day, my other channels, I used to take live trades. I ain't really give people education. But this channel, I'm gonna start educating people on the way I trade. So y'all gonna get that sauce, you dig, for free. So if this video was helpful, hit that like, subscribe, and that bell notification, you dig. Support the channel. Peace.